Turn off the tunes. If you like the music in my videos, it's me. You can go on SoundCloud and find it by searching for Red Band. I've been playing guitar since I was 9 years old. Don't play as much as I'd like to, but try to record something every once in a while, so you can always check it out there. So what we're going to do today is something a little bit different. I'm not going to be reviewing any action or doing any planning. I'm actually going to share with you something that most people would charge you money for. But I want you to have a sense for how this works, primarily so that you can explore yourself and learn about how to do it, but also so you can appreciate what goes into each and every one of the signals we use in the trade and perform room. Now, I want to be perfectly clear that I'm not giving away anything that I don't have rights to here. This is something I've developed myself. Not all these, but the one I'm going to share with you is something I've developed myself. I have not yet fully back tested it. I am not recommending that anybody trade futures with real money using the signal. I'm doing it for educational purposes only. I don't have a license to sell financial products, all that stuff, right? So assuming that you agree with that and you are interested in just learning the process of how do I make these pretty colors show up on the chart, and what if I want to change the settings for these things, and what's an example of an algo that's based on indicators and order flow that might be useful to me. I came up with one that I've been working on lately and have refined it down enough that I feel it's okay to share it without having anybody get into deep trouble. Because from here you can take it and do whatever you want with it. Now, I do have a few of our trade and perform algos already on this chart, but it's very torn down. It doesn't have everything. It's missing the channels, and it's missing a lot of the things that I added on my typical charts, which now look like this. So there's lots of things missing. But what we're going to build, and we're just going to do it together, and I think that's the best way for anybody to learn, is that you can just watch me do it, and you can do it along with me. What we're going to build is these little blue and yellow squares. So when we're done, we're going to have these blue and yellow squares on our chart. And like I said, I'm not going to suggest that you're going to make $1 million by doing real trades when those things show up. But realize that having an objective way to decide when you're going to get in and out of a trade in and of itself will help you stay disciplined. So the first thing you're going to need to do, assuming you're in Sierra charts, is you're going to go to your list of studies. Now, the numbers, and you're not going to have all these, and so the numbers that for the IDs are going to be different than they are for mine. So understand that you can't just copy and paste my alert and expect it to work on your system, because my system has totally different IDs than yours does. But we'll be able to figure out, I'm going to show you exactly where to find out what your ID is that you're looking for. So the first thing we need to add is, these are all in the regular, you don't have to buy anything, you don't have to pay for anything, it's all in the default list from Serial Chart. You're going to scroll all the way down to F, and here you'll see something called Fibonacci bands, okay? You're going to add that by clicking add, and it'll show up over here. Okay. Now, I'm going to remove it because I've already got it added here. I've just got it hidden currently. So that's the first part that we need. So the Fibonacci bands, I believe I have it already. Fibonacci, right at the top. So I'm going to unhide them. Okay. What they look like is like that. Now, I personally don't like the way they look. I'm kind of picky about these things, and I like my charts to look a certain way. So we're going to go to settings, and we're going to first just change how they look. So the first thing we're going to do is we're going to change all of the line styles. We're going to change those to be the top of a rectangle and a bottom of a rectangle. And that way it'll be a shaded area. And I want it to be transparent. So it will be transparent fill rectangle top for the upper 2 and upper 3. for the upper two and the lower two. Yes. Transparent fill top. And then the lower two and the lower three. Am I doing that right? No. Sorry. Upper two. Let me make sure I got this right. Hold on, guys. Let me make sure I got this right. Okay, whatever. I'm pretty sure I know what to do. This should be top, and this should be top. So where it says draw style, we're going to draw down to transparent fill rectangle top, and then the rectangle top. Yes. Okay. Now this one, the upper three and the lower three, is going to be transparent fill rectangle bottom. I might have these reversed. We're going to find out in a minute. I'll make a fool of myself if this looks wrong. We're going to see. Yep. Okay. That's reversed. My mistake. So we're going to flip these over. Transparent fill rectangle top. There we go. Transparent fill rectangle bottom is going to become top. And then this is going to be bottom. I'm always a little bit confused about this. I'm a little bit dyslexic. So my mistake. That's what we want. Okay, that looks better. So now, instead of coloring the entire screen, we're only seeing the area in between each Fibonacci. We'll have like an upstairs band and a lower band. And you can color them however you want. Doesn't matter. I personally kind of like them light colored. And I like them quite transparent so they don't get in my way. So the higher this goes, the more transparent it's going to be. But let's just, this is a little bit hard to see, so I'm going to use like a gray. That looks a little bit better. Now, hold on a second. Am I just supposed to do transparent fill top? Or, oh. It's looking a little bit funky. No. Okay, hold on. Maybe it's just transparent fill top, because it's got that square look to it, and that's not what I want. So hold on. Let me try transparent fill top and bottom. I think that might be what we want. Transparent fill top. Whoops. My goodness. Okay, and then transparent fill bottom. Let me just see if this is right. Rectangle. There we go. So this way we're going to take all those little angles away, and it looks a lot smoother. So transparent fill bottom, transparent fill top. So I've got a little. This is typically what happens when you go through, learning something new. Is you're going to have to experiment with some of these, but those are the kind of options you might have. The transparency level's down here. I like about 80. If you can't see it, change it to 75. So that's the Fibonacci bands, just straight from the Sierra chart, live. But the idea is, in my experience, I like the Fib channels a little bit better for now. There are times when this is more useful, and the setups that we're using in the train and perform room are not going to work the same here. So if you're using this, just use that. If you're not in the room, this will give you an idea of what it's like to use those, but it's going to be a lot more like a traditional Keltner channel without the you're not going to get, because with the trade and perform ones, what you end up getting is like perfect touches on the retraces, like this, that end up being really good entries, and this, you're not going to get that here. It's just going to give you the feel, right? It's like it's the generic version. Okay, so this is the generic version, and it'll get you started to at least get a sense for trading short from the top and trading long from the bottom. All right, so you need that piece first. The next piece we need for our little squares that we're going to add is you need to add a volume by price. So it's all the way down at V. Volume by price looks like this. You're going to hit add. Now we're going to have to change some settings for this. So mine's ID 102. Yours is going to be like ID 2, right? And that's fine. So the first thing we're going to do is we don't want the profiles to show up. In fact, it doesn't actually matter what it looks like if you don't want them to show up at all. But we're going to make it so that we can actually see the line that we're going to use to trigger our system. So for now, we're going to, rather than volume profiles and everything else, we're just going to do the POC, value area high, value area low, VWAP, and lines only. But we're going to turn off everything except for the POC. So down where it says, somewhere in here, draw POC, we're going to say yes. Extend point of control. No. Highlight point of control. Here we go. Yes. Okay. That's the most important thing. And then we're going to make sure it's not showing the value area by making all of these ignore, with the exception of the POC, which we're going to make a stair step. I personally kind of like making it blue, but you can make it whatever color you want. And then I like it to be a dotted line. And then what you should see is that it'll show up as a stair step. Now, we're going to change the period here. I've experimented with quite a few. You can use anything you want, but I'm finding 60 works really nicely. So under time period length for fixed time, it's going to be 60. And time period type for fixed time is going to be minutes. Now, ticks per bar is going to depend on if you're trading ES or NQ. If you're trading ES, you probably just want to use 1 tick per bar. And you can see here we've got ES, so we're going to change that to 1. But if you're trading NQ, you might want to use 2 or even 4. So now, and you can experiment with that. When we hit OK, what we should see is a blue stair-step line that is the 60-minute point of control. If we don't, then I've got it hidden. It helps if it's not hidden. So I've made like every possible mistake here. So right where it says hide, you got to make sure that's not checked. And what you should see is the dotted line that stair steps when it changes. So as volume shifts up, it stair steps up. If volume shifts down, it stair steps down. I know I've got some other lines on the chart like the highs and the lows. I'm just going to leave those alone. And don't worry about all the other signals. I find them very useful. You may or may not. So, but you should be able to now see, if you follow that along. If you didn't follow it, just rewind it. But here, because I've got you should be able to use all those features. Or you can pause it and stuff. But if you can see the Fibonacci bands and you can see the dotted line, then you're going to be able to understand the setup. So let me explain to you quickly what the setup is, and then we're going to add it to our chart. So the crux of the setup, there's a bullish and a bearish version, is when we have a situation where the POC from the time period that we chose, I put 60 minutes, you can use 10 minute, 2 hour, it doesn't matter. When that POC is basically inside these channels.
Connection lost.
Oh, did I lose you guys? Uh-oh. Might have lost you. Let me see here. Sometimes I get, if I just lost internet, let me see if this still works. Hold on, guys, sorry. Internet. Okay, I think we're good. Sorry. It said connection lost, so it might have just been my ninja. Thankfully, I wasn't in a trade. Okay, where were we? So, yes, how does the trade work? The idea of the trade is when the when price comes here. Let me read it for you. If the bar, this is for the bullish version. I'm going to show it to you right here, so you can read along with me. It's going to be called the POC reclaim, or reclaiming this POC line, and the idea is when the bar closes bullish, the Renko bar. This is a 24 tick chart. I'm sorry, 6 tick chart of ES. You can use whatever you want, right? When the bar closes bullish, with the POC of the last X time period, so we're going to use 60 minutes, but you can use whatever you want. If the POC is positioned below the high of the bar, for instance, here the POC is positioned below the high of the closing bullish bar, but it's also above the low, which it is here, and it's also above the bottom fib channel, which it is here, I believe, maybe even to it, then this, oh, and then in addition, the previous bar must not close above its own POC. So let me get real close in here, I'll show you how this works. So we should get a signal, I believe, on this bar because the POC for bull. So the POC is below the close but above the low, right? It's also equal to or above the low of the Fibonacci band. And then the previous close did not close above the POC at that time. It closed below it. And so we'll get a signal to buy this. Then an example of a sell would be here. The close is below the POC, but the low is above the POC. It's exactly the opposite. And the POC line is below the highest band on the fib. And then the previous one, the POC was all the way down here, and so it is not below the POC, and therefore you'll get a signal here, and you'll get a signal here. So let's build the signal. What we're going to need, we're going to studies. That's what I'm going to build with you. We're going to go over here to the C, and it's going to say color bar by alert condition. Color bar based on alert condition. We're going to add 2 of these. 1, 2. Now mine have already been saved as a default so that I don't mess up the settings. But let me show you what you want the settings to say. You're going to need to adjust this. You're going to make it, you're going to give it a name, such as break over POC or reclaim POC. You're going to need it to calculate quite a few bars. The more you do it, the more bars you do, the longer it'll take to load. So keep that in mind. I usually use about 2,000. We don't want to automatically clear from before a number of bars. The output condition is when true, you have to change to use input data. That's really important. And the input data must be last. Then, depending on where you want the signal to show up, you'll change this number. And you can also change it to ticks rather than percentage. Since this is going to be a bullish one and the signal occurs on the last or the close of the Renko bar, I want it to go 5% below, or not number of ticks, 5% below that the close. So it shows up below these speed trap, because I don't want those to get covered up. So I want it to show up down here at the bottom of the bar. Now, under subgraphs, you're going to be able to tell it what you want it to look like. Remember, this is going to be the bullish one. So I chose square, but you can make it a star, you can make it a colored bar. Your color bar will just change it into like an orange or a purple bar or whatever you want. I'm going to make it a square because that's something I don't have. And then I made my own color here. Okay, sorry. Now, for our alert, what we need to do is we need to take this idea of a bar closing bullish with the POC of the last X time period positioned below the high of the bar, but above the low and above the bottom of the fib channel, while the previous bar did not close above the POC. We need to turn that into Sierra chart code, okay? And this is the part where most people get a little bit freaked out, but it's actually not that hard. I'm going to break it down for you. Once you learn how to do it, it's not that hard. So I always recommend writing these things down because otherwise it's really hard to bug fix because you don't know where the problem is. So we have to start the equation with the equal sign, and then we're going to say and, because we want the bar signal to only show up when all of these conditions are true. All of this needs to be out. It's not this or some other condition. It's when all of these things happen, show me with a blue square, right? That's what we're trying to tell it to do. So first, bar closes bullish, right? So the way you code that in Sierra chart is ID0 dot SG23, which is the close, is greater than ID0 SG22, which is the open. So since it's a Renko bar, it's Renko bar close is greater than Renko bar open. Therefore, you're going to have a bullish bar. Now, you'll notice before this, you need parentheses. And in this case, we're going to need two sets of parentheses on the left because we have to close this condition and then close the entire alert condition. So we have a sub condition closing or opening, and then you have the entire alert condition opening, the sub condition opening, and then you'll see the sub condition closes, and you must have a comma that comes after that sub condition close parentheses. So it must look just like this: equals and parentheses open parentheses, two of those, right? Open parentheses, ID0.SG23 is greater than ID0.SG22 close parentheses, comma, right? Meaning that and whatever comes next. We open a new subcondition, so open parentheses. And now what we want is the POC of the X time period positioned below the Fibonacci band. So to get that, what you're going to need to do is you're going to need to go find your Fibonacci band and find your volume by price and figure out what the ID number is. So here, my volume by price 60 minute, the ID is 102. And if you hit settings and you go to subgraphs, you'll see the POC, the point of control, is SG2. So for me, it's 102.SG2. For you, it might be 2.SG2, right? But one way or another, it'll be whatever the ID number is here, it'll be that followed by SG2. Then your Fibonacci bands, my ID number is 73, but yours is going to be like 1 or something like that. And what we're looking for is to make sure that it's above the lowest band. Well, the lowest band is L3, and so that is SG7. So the ID number, then dot SG7. So for me, it's ID 73 dot SG7. For you, it might be ID 1 dot SG7. Okay. So that's the next. So ID 102.SG2, that's the POC of the 60-minute volume profile. It must be greater than or equal to, he said, the fib band, ID 72.SG7 for me. It might be ID 1, it might be whatever, but it'll be .SG7 for you too. Then you're going to close the parentheses and put another comma. Now, we need to make sure that the close is above the POC. We don't want to be alerted here. We want to be alerted here when we close over the POC. So again, Renko close. So open parentheses, ID 0.SG23. We want it to be greater than the POC, which I said for me is ID 102.SG2. It's going to be the same exact ID and SG number as right there. Then comma, close parentheses, comma, open parentheses. Now we need to make sure the last condition was that the previous bar did not close above that POC. So to write previous bar close, what we do is we open parentheses for a new condition, ID 0.SG23, Renko close, and then we do bracket, -1, bracket. So open bracket, negative sign, number 1, close bracket. That means looking back one bar, the close of that Renko bar. We want it to be less than the POC, which we've seen twice before as ID 102.SG2. And so you'll see that here. But we want it to be the POC at that time, not the current POC. Sometimes it's going to be different. So that one also needs a bracket, -1 bracket. Okay, so the last condition is parentheses. After a comma, must have one comma. Then parentheses, ID 0.SG3, open bracket, -1, close bracket. less than sign, ID, for me it's 102.sg2, for you it might be 2.sg2, and then bracket, -1 bracket. Now we have to end that condition with a closed parentheses, and then we have to end the entire color bar alert condition with a second parenthesis. So you should have 2 closed parentheses at the end, and you need to have closed parentheses and a comma after every single other condition. If this is all correct and you have enabled selected, you can hit OK and then hit apply, and what you'll see is the blue squares should show up if we did it right. Now, for me, I may not have done it right because I might have a different. Let me see if I have the right things here. So 102. My Fibonacci bands are 73, not 72. So I need to make an adjustment here. You may find you make a mistake too. It's okay. Just go in here and I'll be changing the 72s to 73. I pretty much made a mistake in every single place. And so that's good because you guys probably will too. Hit apply and they suddenly should show up. They suddenly should show up. 102 SG2, 73 SG7. Is it hidden? No. Apply. Should be triggering right there. Oh, they are hidden. They are triggering. So there they are. This one just didn't quite reach it because it was too low. It's below the Fibonacci band. So the one we were pointing to before was this one. That's why I got an arrow to it. So that one triggered. Of course, this one did too. Told it to buy. Okay, that's the bullish one. Now let's make the bearish one. It's basically exactly the same, except inverse. So what you can do is you can go back to your POC reclaim, and you can set defaults. And then when you add another color bar condition, it'll look just like it. That's the easiest way to do it. Otherwise, you just have to go through here and make all those changes again so that they match. You can also duplicate here. The easiest way to do that is to go like this. Here, watch. Remove. This is an easier way to do it than setting the default. Because since you're going to stay in the same chart book, you can just hit duplicate. Okay. Then settings. We're going to change the short name to under. All these things should be correct, except that I want to change the percentage to a positive number since the alert condition will happen on the low of these bearish bars, and I want the square to happen at the open. So +5. Now, I want to have a different color, otherwise I'm not going to be able to easily identify that it's different. So we're going to go with like a mustard color. And now I've got to make these changes. So everything you can just copy and paste to start, but you're going to have to change all these directions. So we want the close to be less than the open, right? Because it's going down. It's a bearish bar. We want the POC to be less than or equal to the Fibonacci band at the top. Whoops, that's not SG7-1. SG7. Let's see what it is. It is Fib. The very top bar is U3, SG6. Furthest one away to the top side. So, rather than SG7, this needs to be changed to SG6. And like I said, we want the POC to be, under, no, over, wait, yeah, under this one. Under this. So, less than or equal to the ID number for your fib, then .sg6, then parentheses, comma, parentheses. We want the close must be less than the POC, which will stay the same. And then the previous close, which is with the brackets -1, we need it to be greater than the previous POC. So it should look something like this, but your ID numbers will be different. Then you hit apply, and suddenly the yellow ones will show up. Hit OK. And now you probably want to save this so that you don't mess it up. And when you save it, you want to put a plus there or just hit this check. Whoops, I spelled that wrong. It's a play on words. I think, yeah, because it's mostly empty compared to the other one, so it's bearish. Get it? I know, dad joke. So you're going to save all here, but make sure this is clicked so that you don't, in case you had other studies, when you shift to this one, it'll prompt you to remove the existing studies, which is what you want. So now I hit save all and hit yes. Now we're going to erase all the lines. I'm going to show you how to use this study. And like I said, if this went too fast, just watch it again, please. Rather, like I said, I made the mistakes not on purpose, but I'm kind of glad I did, so you can see that it's okay to not do it right the first time, as long as at the end it looks correct. Your alert conditions, you won't be able to copy the ID numbers, but I will give you the alert conditions that I would use here, that we used in this example. I changed it to 73. So this was my bullish. So your ID numbers will be different. Here's my bullish code. Okay, and then the bearish code. Looks like this. But I want you guys to understand it. I don't just want you to copy this. And so I'm adding it now, not before. So there's that. Okay, so now if you know what your ID numbers are and you understand how it works, you should be able to add it now. So let's go see it work, right? Let's see how this all plays out, and then I've got to get some rest because I am exhausted. Hold on real quick. Okay, so let's see how this works. Now, like I said, this is not intended to be like a trade strategy that you should be relying on exclusively. Okay, you're not gonna make money probably if you just sell all the yellow squares and buy all the green squares. Maybe you will, but it'll depend on where you exit. So, but realize you can't just sell every time it comes up and keep selling and expect to make money. It doesn't. You're gonna have to have some sort of strategy with how you go about doing it. But I just want to show you kind of how this works, and then also show you that once you got this done, technically you could get rid of the green line or the blue line if you want. If the blue line is obnoxious to you, you can now go to the VBP that you added and hide it, because I just wanted to show it to you so that you could see how it worked. But really, you don't need that line. I kind of like the fib channels, but if you don't like those, you can hide those too, because we've already used what we need to make it so you can hide those extra signals and then just have the entry and they just have the entries marked. Okay, but I'm going to leave it there because I want you to see how it actually works. But on your chart, you might find them distracting, in which case you can just hide them. Don't delete them, because otherwise your alert system will no longer work. But if you just hide them, it will continue to work. So why does this potentially help us make trading decisions? Let's think about how this works quick. And like I said, I can't stay up too late, but I'm going to show you just from previous price action when this works well and when it appears that it doesn't work well at all. So first of all, when it works is when you have wide trading ranges with direction very clear. Okay? For instance, let's say you were trading right here. Okay, this is an example of direction becoming a little bit unclear, but here, I'll do it right. Let's start easy, right? The easiest way to use this would be a situation like this. Okay, what you would do is you would have to identify that we were bullish. I'm not giving you tools to do that. You're going to have to figure out on your own how you know it's bullish. And then you're going to have to decide where you want to be getting long, like what locations, which is up to you depending on your time frame and all those things. And then when it looks when you have reason to believe it's bullish and you get one of these signals at your location, in other words, let's say you were looking at a chart and you said, I want to be bullish as long as we are, you saw this big chop and you're like, okay, I just need them to overtake wherever all the volume is here. That's a pretty reasonable thought. So you come all the way back here, maybe back out a bit. This is going to be where it's hard to make it work. And you say, okay, wherever the volume was during this big volume build, there. So that line right here, I want to be bullish if we can get above that and have a strong signal, right? Okay, well, if you do it during this time, we're going to come back to that. Don't do it during that time. Do it after you know that it's bullish, right? So, for instance, here and here, it interacts with that level after trying to get bearish and failing. And like I said, maybe you could use some other indicators. I've got my own favorites, but you can use whatever you want to decide why you think that the market's not going any lower than this. I've got my voodoo range levels that help me a lot. When we reject off of them, I generally, and we've been bullish, I generally expect the trend to continue. Do what you already, if you're watching this, I assume you already know how to tell the difference between a bullish and a bearish market. So if you know it's a bullish market and you don't want to be shorting, well then, once you have the location that you think you want to be getting long, but you don't know when, you would then wait until you get these signals at that location, which happens at either one of these times. Now notice you can't just put your stop right underneath it. You might get stopped out and you'd have to take it twice. It's just not that strong of a signal. Like with the trade and perform signals like the star, you're going to get those way down here and you can have like a 1 bar stop, right? It's powerful stuff, but it costs money to be in the room because it took him years and years to develop this. This is something I'd literally developed in about 24 hours. And so, yeah, you're not going to be able to get a 15-point or a 4-point ES stop, right? You're going to have to put your stop under support. So like maybe down here, and that might be unreasonable. And if that's the case, then, keep working on finding your own signals that work better or join us for stuff that work better. But if you've never used a signal before, it might be a good place to start. So here's where you get long, and then as long as it stays bullish, you're going to get an extension. Notice, because we thought it was bullish, you ignore this. You don't short that. It's not a reversal signal, okay? It's a reclaim, like continuation with momentum. So if you think it's bullish, you don't short the yellow squares. You just keep buying the blue ones. This one's pretty close to a good location at the voodoo range level. Probably going to continue. We would avoid all. We're just waiting for blue unless we see evidence that the trend has changed. And so that's the question. Has the trend changed now? Well, are we making higher highs? No, we're making lower highs. So the trend may have changed, right, on this time frame. So there's the first blue. And not surprisingly, it immediately stops out. Why? Because it's no longer bullish. It's now sideways, right? Now, in choppy sideways markets, this indicator will not perform very well. But if you can get the direction right, or if you can figure out which direction we're headed, it will work well. So, for instance, this one failed right away, and then it gave you another one going the other direction. That one works. Guess which way we're probably going? Probably lower. Now, it doesn't give you another opportunity to get short, but had it given you another one up here, you probably would have taken it. So we wait. There's no signals. There's nothing to do. So here we go. Lower high. If this shows a yellow square, I'd probably try it. But it doesn't. Now, does it still look bearish? Not really. So I'd be cautious about yellow squares. Now it's definitely not bearish. But notice we had no signals, nothing to do this whole time. And that's why that's the hardest part about learning how to trade a system that's objective like this. Is like there's no discretion here. The only discretion is, do I want to follow the signal and buy or short, or should I ignore the signal and do nothing? So you can see, okay, there we go. First, the next signal is here. So you'd have to already know before this, because these happen fast, right? You'd have to already know, do you want to be a seller in this market? Well, personally, I see higher highs and higher lows, so I'd probably skip it, although in this case it works. But then we get a blue one. It's a little lower than it should be. I don't know why it's down there. doesn't matter. We get it down here. That is definitely a valid signal. Is it still bullish? Higher high. It might be a head and shoulders with a lower high and a lower low. I might skip that. Right? Because now, and then when I get this, and then this, I'm probably just going to wait. Because this is no longer bullish or bearish. I don't really have any reason to think it's going to go one way or another, except for maybe thinking it's head and shoulders so that the bearish ones are better. But look, even this bear one, it gets traded behind. So it's not perfect. Right? And now once this one gets an extension, I'm more likely to take this one. And I'm more likely to ignore the blue one. I'd probably not take that. Because look what happened to the last blue one. Nothing. So I'd probably, yeah. And then that one's probably confirmation that it's going lower. I'd skip this one because there's nothing that's changed. It's not a reversal signal. This one is probably good. Okay, so that's where it gets tricky, is you can't just blindly take every signal. That's important. Okay, so now, are we still bearish? That's the question. Are we still bearish, or have we gotten into a support zone and now we're going to take off? You know, sometimes you're not sure, but if in doubt, just wait. If you think you're bearish, then you short, right? Now, it comes right back to blue, but are we bullish? Is there a higher low? I don't think so. I'd probably ignore this and wait to be stopped out or paid because it looks bearish up here. So I think the right thing to do here is actually just to short and stay short. Yeah, and there's the confirmation. If you waited here and we're like, yeah, I'll take the next one. I'm not sure if it's really that bullish. It looks pretty bearish, but I wasn't ready for this. Now you can be like, oh, okay, that makes sense. Bear, bull, bear, probably going lower. Bear, bull, immediately bear, probably going lower. Like I said, now look, bear, bull, what do you do with that? I don't know, right? I don't have the back testing results. You get stopped out. That's probably what happens, to be honest. And then maybe you re-enter. So it needs, yeah, so this little, if you took every one of these signals, this would be pretty detrimental to your account, which is why I'm saying I don't recommend you trade with real money just using the signal, but it's a good example of to get you started with how a signal might work. So how would you maybe ignore or avoid this? So let's say you were like, I really like the idea of the signal, but I can't handle all of these stops. I only want to know when it's going to work. Well, you're not going to be able to get it that good, most likely, unless you have some machine learning and stuff like that to work through, or a whole team of people to like delve into what the difference is in each one of these situations. But if you wanted to just say, I don't want to get triggered long when we're going lower, and I don't want to get triggered short when we're going higher, all you'd have to do is add a condition in there with a momentum indicator. So for instance, you could add like an RSI, and you could say if the RSI is this low, you know, below, I don't know, 50 or something, whatever, you don't want it to just show up. So in other words, what you would then say in that case is the alert condition would be that RSI needs to be above 50, right? That's, I mean, and I'm not saying that works. I have no idea. I haven't tried that. But I'm just saying that would be an example of how you would get rid of some of these signals. And then you'd probably only get the yellow ones here. But then you'd probably miss these. And you might get this yellow one, and you probably wouldn't get this one, right? So it's kind of like you have to decide whether or not you want more information or less information. But what I noticed right away is once you identify that it's bullish, like let's say you missed this, right? Let's say you didn't even think it was bullish because today was kind of weird, and you're like, I don't think it's bullish. I'm gonna take this short, and if they stop me, they stop me. It tells you to go bullish. You don't listen, and it stops you out. Not the end of the world, right? You just know it's bullish now, and so when you get a pullback, well, now I know I'm starting to look for bull trades. Well, they trigger me in right here, and again, you really do need to put your stop below support, not below the bar, because this one clearly stops you out, gives you a bearish signal that is definitely not a good idea, because it's not a reversal signal, and then gives you a good entry right there. That one probably pays, yeah. Now, again, is it still bullish? I don't know, but I have no reason to think it's not, so I'd probably skip that. And I'd probably take this. And I'd probably skip that, and I'd probably take this. So you would need some discretion if you don't want to push this any further. If you want an example of if you're frustrated by these, if these are causing you problems, what you could say is that you only want to be alerted if the low is above like one of these bands, right? You maybe like both of these red bands. So like you'd get this signal, but you wouldn't get this sell because it's too low. And then if you got a buy way up here, you would miss this one, which is nice, but you'd get that one. That's fine. Filter it however you want, right? Just if you lose money trading it, it's not my fault. Like, so we made a higher high and a higher low. Like this one technically triggered short, but I don't think I would have taken it because it just doesn't look bearish. And then you can see what they did. They triggered short. They triggered short. They can't get any lower. They triggered short. Guess what they're probably going to do? They're probably going to come down here, trigger long, and take off. Probably. Otherwise, they're going to chop here, and there's nothing to do. One way or another, I don't think this is bearish. Unless I get yellow, blue, yellow, dive, then maybe the next one I can take. But you can see that you're not just going to be able to, it's not sophisticated enough to buy blue and sell yellow. So and like I said, I really intended this not to be some kind of holy grail how to trade and make money. It's a little introduction into what if I have this idea and I wonder if it would work if I just bought every time this happened and sold every time these conditions happened. Well, now you know how to code it because it's the same no matter what it is. All you need to know is what your ID numbers are, right? So if I wanted to do, I want to know when the white wave is above 200. Well, I just put an alert condition that refers to ID 37 and say that it has to be over, like ID 37 SG1 needs to be over whatever I said, 200. And then it'll mark every time that happens, right? So you could literally do that with anything you could imagine. And it might not work, but you could code it now and at least experiment. And if nothing else, learn just how much work these custom studies take to make them work as often as they do. If you don't want to go through the trouble of developing your own system, what I would recommend is you give an email to Simon, which his email is the trade, the letter N, perform @gmail.com. He runs the trade and perform room. Try to perform trading futures trading room. If you mention that you follow Red Ben, Simon will give you a free week in the room. Okay? In the room, in our room, what you're going to see is Simon's sophisticated algo that identified these shorts. It's a scalping system, and these longs. See that? And we know not to take this. So this system is really good. Really good. And so in the room, you have access to Simon's screen. You get coaching, and then we get daily. He does all the homework for us, figuring every morning we get or sometimes the night before, we get the levels for the day that we should be watching based on his homework. So they might look like NQ for today looked like this. Let me see if I can bring this up here. So we're in a Slack channel in the room. And so this morning we got NQ levels, where to trade, where not to trade. So don't trade in between the blue dashed lines. Try to trade in the yellow zone or the green zone. Purple is an anomaly. And so, for instance, let's just take a look at one of these. 10.960, 10.947. Let's take a look at those quick. I just want to show you that he does know what he's talking about. 10.960, 10.947. So we're going to take this. Okay. Let's say that you had a level at 10.960 and you were trading today. Would that have been helpful? So that was one of our levels. Whoops. And so coming into the day, here, let me color it different because there's other colors. We're going to quick color it red. It's close enough. It's like one tick off, which is bothering me, but whatever. So CPI, we dropped through it. No one's going to trade that. It comes up, doesn't reach it, right? We had other levels to work with. Okay. They try to reject off it. There's no short signal here. There's nothing to do here. But if it comes back into it, let's see what it does. Okay, we put in a high here, right? There's a short, potentially, if you're bearish at the level. And then there's a short, there's a short, there's a short. Oops. Right, so all sorts of opportunities to catch this trade. Let's just this one trade, right? And I'm not gonna go through each one of them, but 10,960. Let's say you saw that and you got short on the very first one. You were really anxious. You saw this interactive 10,960. You really wanted to short all day. You get short at 10,948. Let's say you were a little late, right? Your stop might go at 10,9 like just a little bit above, like maybe like I don't know, above somewhere up here, above 10,960, since you know that's the area that you want to be getting short. You don't want to be buying there. Where would you have gotten 10,940? Your best case scenario, is it right there? I mean, I'm probably not holding it any longer than that. Best case scenario down here, 10,876. So like more than 80 points, right? So 80 NQ points, that's like $1,600. Like come in, take one contract, $1,600 done for the day. Just because you're on a level and an algo. To get into the room, it's only $95 a month. Okay? Which is crazy good when it comes to value, considering what you can do with the algo. And then when it comes to getting the algo on, if you want to do more back testing with the algo, you want it on your desktop like I have it, rather than $95, it's $250 a month. Not and $250 a month. It's just total $250 a month. So, and then you get it on your desktop and you can do whatever you want with it. Simon also has some pretty good like package deals with some private coaching. Talk to him about all that. You know, he's a fair person, like when it comes to business, and he's not a salesperson. So he doesn't do any marketing. It's a small group of people. His prices are his prices. You're not gonna be able to haggle them or anything, but it's important to realize that like the value is absolutely great. And I've been in his room for over a year and have made some amazing progress, which anybody looking over my Twitter can see if you just look over the last year. Now, unfortunately, this got pretty choppy. I was hoping that maybe we'd get a signal here, but you see how choppy it gets and how difficult that would be to trade. Now, with this trade and perform room, we noted short orange above the channels, which are here and here. And with this system, you got them here, and you're already short, right? So, you know, you really don't need all of these signals. You maybe only need 2 of them. But I just really wanted to let you know that this is what we do when it comes to how we do our coding. And then from that point, once we would have these codes, this coded in, we would then do some extensive back testing and optimizing across multiple different indexes. And yeah, that's how we improve the algo to be as like powerful as it is. So if you guys have any questions, you can always DM me. I'm RedBenTrader at Twitter. Make sure you follow me there and on YouTube. And then yeah, give Simon an email. Let him know that I introduced you to the Trade and Perform Algo and that you want to learn more about it. He'll give you a free week and you can trade with us and see if it's something you want to learn. I will see you guys.